Welcome back, everyone. Today's video is 5 things that are important to consider when looking at mining stocks, particularly juniors. And these are big things in no particular order that are important to look at that help you value and decide if a mining stock is the right place for your money. Okay, so the first thing I want to start with, because sometimes it seems glossed over in certain, well, by me in certain things when I'm talking and by companies when they're talking also, and that is stage. Where is the project in its life cycle? Is it just a resource? Is it a preliminary economic assessment? Or is it a pre-feasibility or definitive feasibility? This matters a lot because often the discount in the thing, in the net present value, takes you back to the beginning of the construction. But if that's 5 years away, that's a big difference than if construction's starting next year. Also, if you're looking at the life cycle of, or the commodity cycle, it's important to know when your project would fall within that timing of cycle. For that, the first thing you look at is the stage of the project. The next thing that I feel it's very important to look at when you're evaluating a project is the size. Now, you could have two projects that are 1/10 of like their net present value is 10 times their market cap. But you have to look, will they get built? Are they big enough to matter? And will they get built? But more importantly, how much money will have to be put into the project, making economic assessments, feasibility, how much management's getting paid, the cost of upkeeping the company. That doesn't scale as accurately as the cost or as the net present value in the future. So will it be worth it to bring the project along the line? And to that statement, I'll say that this may sound like a contradiction, but it, it often isn't worth it for the tiny companies to advance tiny projects because the cost is significant and the dilution that is associated with that is, again, significant. Okay, so this one is some people will stress it 100%, others 50%. But a very important thing to look at is the management good? And this is sometimes hard to judge because you have the people with a long track record of success, and then you have some people that have had a good sale or good project or something, and then the rest is trying to evaluate things. So I do think it's important to have management that has a track record of either success or, well, hopefully end uh, va valuing shareholders. And I think it's also important that their interests are aligned. So check to make sure that they own a decent portion of the shares of the company. Um, for Canadian companies, I think a good resource for this is CEO.ca or Canadian Insider. It will tell you where they've been buying, if they've been buying recently, and at what price to check to see what they think of the price of the company. Another extremely important thing, and I probably could have started with this one, but I figured it's kind of obvious that it would come at some point, and that is economics of the project. And here, I would just want to say, be careful and be sure to use an apples to apples comparison. If you look through the different numbers that the companies will try to give you, there's a lot of BS, misrepresentation, trickery, and a whole bunch of other things that try to paint themselves in the best light possible. So, some things to check. What currency do they use when they give you the numbers? What commodity price do they use to give you the numbers? What is the net present value percent and IRR? That's obvious. IRR, again, you want to see above 20%. And and also note that while grade is important, depending on if it's an underground or open pit and proximity to infrastructure, that is also very important and can change hugely, if that's a word, how mineable the deposit is. Now, for an example on currency and commodity price, some uh, companies may use Canadian dollars before tax at, I don't know, let's call it $65 uranium, $65 US uranium, that is. And other companies might use post-tax $50 uranium and give you US dollars in their answer. So just check on that. More things to look at in the economics of a project are it's important to know if there's other big factors at risk, such as is a deposit, does it look amazing because it has some type of byproduct? I don't know, maybe it's a gold deposit and it has a bunch of silver. Well, is it dependent on the price of silver being $20 or does it not matter? Would the project still be a go if the price of silver was $15? That can make a huge difference depending on the project. And there's some other cases where it's even more relevant, the price of secondary commodities. So that's something to be aware of. Also, be aware of how other local currencies where the project might be in production, how they might affect the economics of the project. Now, just a note, a weak local currency is helpful. A strong local currency is bad for projects that sell resources in US dollars as a general rule. Now, the last thing I wanted to discuss in this video is the geopolitical proposition. Think about it this way. Some things about, say, Canada are great for mining. For example, many places have infrastructure, and so you won't be needing to build a power plant, and in some parts you might not even need to build a road to get the products to market. However, if you were building a mine in the middle of, let's just be random and say nowhere, well, how are you going to get power? Well, you'll probably have to build a power plant. How are you going to get the resources out of there? Well, I mean, maybe you'd be able to build an airstrip, as in some cases. Maybe you'd be able to build a road out and to a port. It depends. But that's a big issue of how much your costs are going to be when setting up the mine. Also, some places are very quick to permit, other places take years and years. So if the commodity has a very rapid and very vicious cycle, that could be an issue for you. Also, in the same family of questions, will someone who might want to buy out the project be able to? Will, for example, a Chinese company be able to take over a project in Canada or the US? I would be skeptical, but would they be able to take over a project in, I don't know, Mongolia or Africa? Um, I would think the probability is maybe slightly higher. So that is a factor. Also, needless to say, with the geopolitical proposition, well, almost needless to say, is the place politically stable? In other words, you have this billion-dollar investment that is immobile and at the whims of the local politics. Could that be a problem for you once you've spent all that money and it goes into production? Well, thanks for watching, everyone. I hope you found something interesting or thought-provoking. And until next time, have a great day and catch you later.